Well, hello there, and welcome once again to 5 Homes to Freedom, module number 2. We're now in lesson number 2, and we are going to be talking about banks versus mortgage brokers. And we'll take a look at the pros and cons of each, because again, I mentioned earlier in the previous lesson that for many people, the majority of people actually, they don't even realize or understand what a mortgage broker does or can do for you or how they work. So we're going to take a look at the bank and mortgage brokerage industry. What I'd like to do here though is just remind you that don't get upset with me if you're a mortgage broker and you don't like what you hear, or if you're a banker and you don't like what you hear. This is strictly my perspective on things, but it's a perspective that I share with many different investors. Also, you need to understand that the rules and regulations can change very, very quickly, sometimes without any notice to you, the lender, and it's very rarely is it in your favor. So what I may say today may change tomorrow. Who knows? But this is just a guideline for you to follow. And also, don't get frustrated with either the banks or the mortgage brokers. The people you're dealing with there, they have very strict rules and guidelines that they must follow. There's anti-laundering rules, with all of the different things that's going on in our world today. Money laundering is a major concern. They want to make sure that the deals are legitimate and they're highly regulated, and so they've got a lot of paperwork, a lot of rules they have to follow, and it can be very frustrating to you. And for many people, they take it out on the mortgage broker or the bank loans officer, and it's not necessarily their fault. So just keep that in mind. So let's take a look at banks first and the pros of dealing with your local bank. One of the nice things about it is all your banking services are already under one roof. So you may already have your savings and checking accounts there. So if you're going to be taking money into a new checking account, it's just very simple and easy to open it up in that same bank. And having a long-term relationship, a lot of people believe that having been banking there for 15, 20 years is going to serve them well when it comes time to borrow money. My personal view on that is that it has not happened for me in the past, and very few people have I ever seen that actually be of benefit for them, although a lot of people still believe it is a benefit. Some of the cons when you're dealing with the banks, you're typically only dealing with one lending source, meaning if you go into Bank ABC, they are going to provide funds from their bank and their bank alone. Now, I have seen this start to change over the past year or two, where some banks are recognizing the fact that they're losing a lot of potential business just because they aren't able to lend their money out to the individual. There might be another source that they could access to, so they're aligning themselves, affiliating themselves with one or two other lenders as well, what we call B lenders, that might operate with a different lending criteria. So if they can't satisfy their customers' needs, then they may farm them out to this other lending source. But even then, you're really tied down to only one or two different lending sources, so your options aren't very good. When you deal with the bank, you have to deal with the bank's own set of lending criteria. And each bank may create their own separate lending criteria. One thing that I find very frustrating is one of the banks in my market, they claim they market and advertise themselves as being investor friendly. And they're investor friendly from the sense that they welcome you to bring your business into them, but when it actually comes time to structuring the loan, the criteria that you have to follow is just ridiculous. And the rules and the regulations that they have placed on you is just, it's mind-boggling, and it's not friendly at all. They're just advertising that they're investor friendly in order to get you into the door and hopefully convince you to do business with them. When you go to a bank, what the bank is going to do is they're going to pull your credit report. And that's fine. So they pull your credit report, but because you don't fit into their criteria, they decline you. And you have to keep in mind that over approximately 50% of all applications for conventional single-family homes are rejected. So that's a lot of rejections. So you get rejected from Bank ABC. So you walk down the street and you go into Bob's Bank. And Bob's going to have to go through the exact same process, and they're going to pull your credit report as well. And as soon as they pull your credit report, they're going to see that you had your credit report pulled at Bank ABC. So that's going to raise a red flag to them. Why did you come down here? Are you either shopping for credit, so it means there's no loyalty, or did you get turned down there and there's a problem? And every time you get your credit report pulled by somebody like a bank, that actually causes has a negative impact on your credit score. So it's not good to have your credit pulled multiple times. So that's one of the cons about dealing with banks. Your service may be far less than personal as well. So what I've noticed from when I was a kid or a young adult was that back 20, 30 years ago, the banks were very personal. The bank staff did not move around very much. The managers became part of the community. Today, that's not such the case anymore. You go into a bank and 1 week, and the next week you go in and it's a different bank manager, or you're dealing with somebody else. They've moved up the corporate ladder. So there's far less personal connection there as well. And this is a big one, is that they pigeonhole you. So if you are like myself, you're a little bit unconventional, you're self-employed, and for tax reasons you manage your money so that you report as little as possible for legally for tax reasons, then that means it may be more difficult for you to qualify. It doesn't mean you don't make enough money, it just means you don't fit into their pigeonholes. And because they're not very flexible, you get turned down and you have to go to another bank. When you're dealing with a mortgage broker, it's very different. The nice thing about a mortgage broker is they have access to many, many different lenders, well over 50 lenders. Now the reality is they may have access to 50 or 100 different lenders, but they're going to be dealing with maybe 10, 15, or 20 of the ones that they have the most success with. But even so, that's 20 lenders versus one at the conventional bank. When they look at your application, they're going to assess you, an individual, and your earning capacity, your credit scores. Then they're going to take a look at the property, and they're going to assess this application and choose a lender based upon their experience that they feel would be a good fit for you. It may even be the bank that you just came away from, or it could be another lender altogether. So they will actually help assess where to apply for the mortgage. They will also help you with credit issues. So if you go to them, I always recommend that you go to a mortgage broker, sit down, find the mortgage broker you want, and by interviewing them, talking to them, and have them pull your credit ahead of time. This way you are prepared so that when you do have a property to go and finance, it's going to be much more streamlined, because you may have a credit issue that you're not even aware of. So the mortgage broker, when they pull your credit report, will identify this potential issue, help you understand what the issue is, and help you correct that issue to improve your credit as well. So your mortgage broker or agent can be a very important team member for you, because they can actually help you build your business. They actually will take care of you and help work with you. They're also less likely to move around. They're much more stable. So these people are individuals who are in business for themselves, and they build up a database of clients and they take care of their clients, so you get a much more personal relationship. And the nice thing about this is that there's no cost to you, because they actually get paid from the lender. The lender will pay them to bring business to the lender. So that's a great benefit to you. Some of the cons of dealing with a mortgage broker is that you could get yourself connected with a bad mortgage agent, and the advice that they give you could limit the number of deals that you're able to get into, or it could get you into a mortgage that's not a very good mortgage. Especially in our program, you want to make sure you don't get tied into a mortgage with high penalties and very little flexibility for paying out early or increasing your payments. So you need to make sure that you get a good mortgage agent. And just like a realtor, a lawyer, or any other professional, you've got good mortgage agents and bad ones. And just because they are a licensed mortgage agent and they've been in the industry helping create mortgages for other people does not mean that they are excellent. But many people just by default believe they're the experts and they throw all their trust at the mortgage agent or the real estate agent. Don't do that. Do your due diligence. Make sure that they are fit to work with you. So how do you actually find a good agent then? Well, the best way to find any good tradesperson, agent, realtor, whatever, is through referrals and testimonials, especially from other individuals who are in the business like you are. So in our particular case, going to joining investment clubs or reaching out to people who are actually investors themselves would be a great first start. Then actually go out and interview the people. Sit down with them, have a coffee with them, ask them questions. Are they actually active investors themselves? Do they understand the game of investing? Do they also, do they also work with other active investors? So are they really, involved in doing these creative deals? Because quite often it's more difficult to work with an investor from a mortgage agent's perspective. It's more difficult to work with an investor than it is with a home buyer. So you want to make sure that you have a mortgage agent who's willing to put in the time and the effort to work with you. You want to make sure that they have multiple sources of lenders, including private lenders. Quite often, a good experienced mortgage agent will have a handful, maybe 3, 4, 5 private individuals who have access to large amounts of cash or private lines of credit who are willing to lend money out short-term, what we call hard money lenders. Extremely important to have access to these type of people. When they sit down with you, they should be asking you questions as well and interviewing you. And it would be very prudent of them to ask to see your plan, your business plan. How many properties are you planning on buying? Because if you're only buying 1 or 2 properties, then the quality of the mortgages you get are going to be very different versus if you're buying 5 or 10 properties. So they need to know what your plans are up front to make sure that you get into the proper investment vehicle right off the get-go. And then, of course, unfortunately, there's the old trial and error. If you use one and you don't like the person, do not feel that you have to commit to them long term. What I do suggest, though, is don't jump around while you're trying to get a mortgage for a house. Don't go to 2 or 3 different mortgage brokers. That can be catastrophic for you, because if those mortgage agents do not realize that they have other mortgage agents working for you as well, they could be going to the same lenders, submitting the same application, and the lenders are going to see the applications coming in from 2 or 3 different sources. That throws up huge red flags for the lenders, and you could be blacklisted. So you want to make sure that you stick with one mortgage agent per transaction, but don't feel that you have to commit to them long term after that transaction is done. I do have a interview with Mr. Dan Heon, who is a mortgage broker in Alberta, and he's with the Canadian Mortgage Team. You can go visit his website at www.danheon.com. His interview from version 1 of the program will be posted here for people in version 2 as well. I will also be having an updated interview with Mr. Heon in the next month or 2. Very busy man, hard to get hold of, so I'm at his mercy. I will also be researching and interviewing a mortgage broker in the U.S. market and providing you with an interview there as well. Because understand that As a Canadian investing in the U.S. or a U.S. resident investing in Canada, you cannot use, you have to use lenders from the country that you are investing in. So it's best if you have a good mortgage broker in the country, province, state, whatever the case may be, where you're actually going to be investing. So that's it for Lesson 2. And once again, any questions, please hold those questions until we have a chance for the live webinar where we'll have Q&A. And if your questions are not answered after that, please feel free to email me at ken@fivehomestofreedom.com. That's it for Lesson 2. Look forward to talking to you again in Lesson number 3.